Welcome back. I'm Pratap here. Today is 19th April 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. So yesterday we identified 4 high liquidity zones from daily time frame and 75 minutes time frame. Out of these 4, we got trades in 2 stocks. Even before that, a small announcement please. If this is your first visit to our channel, we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. I kept the videos in a playlist, supply demand zone price action course. I also provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I also provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in the channel. Now let's get into the analysis discussion. Even before that, let us quickly once go through NIFTY 50. The last video I recorded about NIFTY 50 analysis based on supply demand zone chain. I talked about this NIFTY 5 minutes high liquidity demand zone bear trap. We have a high liquidity 5-minute zone, and this is acting as a bear trap. Just above we have a 75-minute zone, just above we have a daily demand zone. See what happened recently in the last 2 or 3 days price action. First, the demand zone has been violated. Prices came to the demand zone. There was a push. It gave some considerable amount of profit from here to here. And after that, the newly created 125-minute supply zone or 75-minute supply zone, they all pushed the prices down again and further pushed it down. And that way, this daily demand zone has been violated completely. Let me delete this. After that again, the prices moved down with a gap down. That means they moved down with a gap down. This entire 75 minutes demand zone is violated. Let me delete the 75 minutes demand zone also. And even before I delete, look into the trap we set. The 5 minutes high liquidity demand zone institutions has set. We identified the trap. And I gave a clear detailed explanation about this trap in our last NIFTY 50 analysis video recorded on 17th April 2024. In that video, I gave a detailed explanation. Please look into that. Even in the comment section of the video also I have given the timestamp. If you click on the timestamp, directly you get into this discussion. So let me delete this 75 minutes. Now this trap, NIFTY 5 minutes trap has been executed now. See what happened? The trap is slightly pierced. Around 5 points below this zone, it is pierced. But that is okay. Because we are within the stop loss. Our stop loss is around 6.5 points or something, or close to 7 points. So we are within the stop buffer area. So those who have taken, you are in the trade. See after that the push. And nearly gave 350 plus points from here to here. Today market is opened in a negative, nearly 250 points minus market is opened. After that prices reached this 5 minutes bear trap, and then the bear trap pushed the prices. But here another interesting point you should observe. I don't know how many of you observed. This 5 minutes bear trap is slightly pierced. Why? What could be the reason? Is there any reason why institutions allowed this zone pierced? Okay, because it is pierced, we are within our stop buffer area. That is a different story. But why institutions let this zone pierced? Generally, they don't allow, right? When they put a strong order flow, they don't allow this zone is pierced. You may say the supply is very strong today. That could be one reason. It consumed all the orders in this zone and pierced. By the time supply has become weakened and demand pushed the price. This is what generally you might say. But actually that is not true. The reason is they set one more trap below this 5 minutes trap. 5 minute zone is a high liquidity zone. For this 5 minutes high liquidity zone, even though it is acting as a bear trap, still they set one more bear trap below this. That means 5 minutes high liquidity zone, institutions set a bear trap. That bear trap you can see in 1 minute time frame. Let me go to the 1 minute time frame. This is a very typical scenario. You will see such kind of scenario. Already one zone is a trap. For the trap again another trap. Why for this? Because this is a high liquidity zone. Probably below institution set. See here, we have a rally base rally. This is the 1 minute zone. Demand zone. This 1 minute demand zone is the bear trap for this 5 minutes high liquidity demand zone. This 5 minutes high liquidity demand zone is the bear trap for the entire daily zone and 75 minute zone all together. But this is the real bear trap 1 minute zone. But this 1 minute zone is within our stop buffer area. That's why our trade is not disturbed. But actually the real trap, 5 minute zone is a trap. There is no doubt in that. For the trap again institutions set another trap. That means how much care they have taken to trap all the bulls. Bulls are trapped today. Not bulls, sorry for my mistake. Bears. Bulls set a trap to capture the bears. Bears means short orders. All the short orders from the 75 minute zone, from the daily zone, not exactly daily zone, we can say 75 minute zone, because 75 minute zone is violated today. And all the 75 minute zone short orders they captured in this 5 minutes. If 5 minutes is also violated, because it is violated, if anybody exited from this 5 minutes high liquidity zone, those orders also captured in this 1 minute zone. See today's price exactly from where it got the support. This is the actual reality. We may think, okay, within the stop buffer it saved us. Okay, it saved us within the stop buffer. But who is the actual reason? This is the one. See, it picked up the order. See, exactly from this 1 minute zone. Let me zoom. You will get clarity. It entered and see the rejection from this 1 minute. That means there is a heavy, strong order flow in this area. That's why huge rejection, not only rejection. After that, see the push continuously how prices moved up. Further moved up, up. And in this area, there is some consolidation took place. After that, it again pushed. There is no more supply now. Only demand is there. That's why it was entire day. After that, it was moving up. And when market is nearing to the closing hour, last 1 hour, maybe some kind of profit booking, still bulls did not compromise. They again further pushed. They didn't let the prices go below this level. And further they pushed and finally it is closed here. This entire price action happened within the weekly zone. Actually, this is the weekly zone. Inside the weekly zone, entire. If this bear trap would have been violated, probably the weekly zone also might have been violated. Let me show you the weekly zone. So let me delete this text, you will get clarity. See, this entire thing is weekly zone. A little above the distal line of the weekly zone, institution set this trap. Below that, there are no more zones. Below this 5 minutes and 1 minute trap, there are no more zones. After that, prices would have easily gone down. But the institution did not allow. The weekly zone is violated. They didn't allow. See the rejection, huge rejection from the weekly time frame point of view. The weekly zone indicates a huge rejection. It could have been a big drop candle if prices are closed somewhere here. But it didn't allow. See the huge rejection. Finally, it will become a ERC candle because there is a hidden gap is there. Of course, a new weekly supply is created here. We have a rally, 2 base candles, and a drop, the drop with ERC candle, but having a minimum expected body here due to hidden body. Because today is the weekly close, definitely we will add a hidden body here. This is the end of the candle. A new candle will start on Monday. So rally base drop, a new weekly zone is created. So this is the point we need to understand about the power of the traps, bull trap or bear traps. This is a bear trap. All bears are captured here. So now let's get into our high liquidity zone analysis. We got 2 trades from our yesterday's report. First one is Dalmia Bharat. It is a very tricky trade, interesting trade. I don't know how many of you people really spotted this particular trade. Most of you might be thinking, there is no fine-tuned area within, because this is a 75-minute zone. We have a rally, 1, 2, 3, 4, 5, 6 base candles, and again a rally candle. And previously prices came very deep inside, close to the distal line of the zone. But still, how the trade worked? First of all, is there any fine-tuned 15-minute zone inside this? No, there is no more of 15 minutes fine-tuned zone inside. We have a drop. Maybe this is not a, this is a very quite big candle. Even if you want to consider, compare it to other candles. See here, this is a medium size candle. Compare it to this is even bigger. So almost large size this is. That's why we are not, even if you compromise and drop, this entire thing is a base rally. Here you would have drawn a drop base rally, you would have might have, but that has been pierced here. This one is. So 5 minutes also you don't have structure. Then how we planned a trade? See, what about here? Here also there is no 5-minute zone. This is a drop candle, this is a rally candle. Where is the base candle in between? Here you get clarity if you go one more time frame below. What is one more time frame below? 1 minute time frame. Go to 1 minute time frame. Very interesting thing you will observe if you go to one because institution tricked that way for this particular stock. It's a very tricky trade. We have a rally candle, we have a base candle. Again we have a rally candle and follow through candles. So rally, base, rally. This is how you have to draw the zone, but a very small area is there to the distal line. I just extended till the distal line of this. A small, for extra safety point of view, precaution, extra precaution. Because this is a 1 minute zone. Sometimes, 1 minute zone near distal line, slightly prices will go down and again they come up. Such kind of things we will observe. So that is the reason why the digital line of this entire high liquidity zone should be the stop loss. That includes stop buffer also, the moment you extend. Okay. So anyway, this is the 1 minute zone. If you look into the 1 minute zone, how do we know it is a high liquidity zone? Just it is a wild guess. There is a possibility that it is a high liquidity zone, 80% level. Because software also can't identify at 1 minute high liquidity zones. The reason is software we fine-tuned up, software we developed up to 5 minutes time frame. Because 1 minute also if I include, it will take hours and hours of time for doing all the calculations. 1 minute we have lakhs of candles are there. Already the existing processing itself, it is taking close to 10 minutes now. Earlier it took 8 minutes, now it is taking close to 10 minutes every day. If you include 1 minute, it will definitely take 2 to 3 hours minimum time for processing. So that's why in the software I didn't include 1 minute processing. But manually we need to guess. How we can manually guess? Maybe we may not be able to identify at the time of this zone creation. Maybe multiple times it is testing. See here, this is the first test. Multiple times it is tested. Not only tested, here within this area new zones also created at 1 minute level. That could be another reason. See here. This is the second test. This is the third test. Here a new zone is created. Maybe we can say drop, base, rally. That way we can consider. Here also you can consider drop, base, rally. So by seeing all these things, just a wild prediction. At least we can, as I told you earlier, at least 80% level we can predict. This could be a 1 minute high liquidity zone. Because it is 1 minute high liquidity zones, institutions are not letting the price go below this. See, previously again another test. This is the fifth test, right? Fifth test. This is third and fourth. Earlier there is one more we have seen. Earlier two more, and this is third, fourth, fifth, and today again sixth. See, at some time this zone will be violated because the risk is very minimal. This is a 1 minute zone, risk is minimal. There is nothing wrong in accepting a trade. In case if it is violated, because we never know, because already tested several times, there is a possibility this time it might be violated, that possibility is there. Or this time it will work, even next time also it might work, or next time it might be violated, anything will happen. If you want to take a risk, a minimal risk, if it is successful, you get a very good profit because this is a 1 minute level zone. Already, and that is not only that thing, there is another reason is also there why this zone will work. See the rejection previously. Huge rejection from this zone. Many times the rejections, you can clearly see the rejections at 5 minutes time frame. See the rejection. Here also it came, and see how the movement here. Previously also see the rejections. So that is the reason why there is another possibility it will work. So that way if you would have taken a trade here and finally reached the target, you would have got a profit in Dalmia Bharat 12,275 rupees, which is 13.3%. 13.3% return on the investment as per one futures margin cost. And what kind of trade it is? It is an aggressive trade. This is not a fine-tuned trade. This is an aggressive trade. But aggressive trade should have a strong price action clues. What is the price action clue? 1 minute high liquidity zone. If we have a lower time frame zone within a higher time frame high liquidity zone, I repeat, if you have a lower time frame high liquidity zone within higher time frame high liquidity zone. What is higher time frame? 75 minutes time frame. That is a high liquidity zone, 75 minutes high liquidity. Inside the 75 minutes high liquidity, we have 1 minute lower time frame high liquidity zone. When you have such kind of scenario, you can take the trade. It need not be a fine-tuned zone. So by bypassing the fine-tune, directly you can take the trade. That's why we are calling this as an aggressive trade. Aggressive trade should be supported by price action clues. So this is a high liquidity, and another price action is rejections from this zone. See the rejection here. And also earlier see the rejections from here. Even next time also came and see the rejection and the movement after that. Because of all these price action clues, there is nothing wrong in taking a risk and plan a trade. That way it became a successful trade. And moreover, it gave a huge profit till this 15 minutes target. See, here we have a rally, 2 base candles and a drop follow. This is a target zone. And easily it reached. So that's why Dalmia Bharat has given 12,275 with 13.3% ROI. Why we got a very good ROI? Because this stock margin cost is also less than 1 lakh. That's why we got maybe around 90,000 something is there. So Dalmia Bharat is a very good trade. And one more trade we got, that is Atul. Last 1.5 hours we got the trade. This is also a 75 minute zone. So we have a drop candle, 1, 2, 3 base candles, again drop candle. And this 75 minute zone, we fine tuned with 15 minutes time frame. In the 15 minutes time frame, we identified we have a drop candle, we have 1, 2, 3, 4 base candles, and again a drop candles. That means a drop base drop. This is the 15 minute zone. Inside this 15 minute zone, we should identify a 5 minute zone. So here we have a ERC candle. You can consider this as a leg-in. And then we have 3 base candles. And then we have a drop candle. Some of you may not agree, because this is looking like medium size candle. Why can't we consider base? That way you say. See, you can add some body, hidden body also here. See, there is a gap, a hidden body. If we add the hidden body, even some more body will be added and the length also will increase. So definitely this is a leg-in candle. There is no doubt in that. Some of you may argue here also there is a gap. If you add the hidden body, if you add the hidden body, still it is a medium size candle only. And a medium size candle can be part of the base if there are other base candles earlier. Maybe this could be a medium size leg candle. Medium size leg candle can be part of the base if there are earlier base candles in this zone. See, we have a base candle, we have another base candle. These are all the tinny candles. This is a tinny candle, and we named it as NRC, narrow range candle. Small size candles. Okay, anyway, we have a base, drop, we have a. Why I consider this as a drop is because of this huge rejection. But here there is a problem. What is the problem? This is your target, let me go to the 15 minutes time frame. This is a target zone. 15 minutes. Maybe this is a leg candle, base candle, rally candle. This is your target. Okay, fine. Up to here we can. But here you have a 5 minute zone. If you take this 5 minute zone until this, if you calculate the RR we are getting only 2 is to around 4. I mean 1 is to 2.4, not 2 is to, I'm sorry. It is 1 is to 2.4. Even experienced people also can, okay, they can take, because close to 2.5 they can plan, but the others, it might be difficult, right? RR is not there. When RR is not there, you can also play some tricks. What is the trick? Go one more time frame below and see any order flow is there. That way you can plan. So let me go to the 1 minute time frame. See here, we have a rally candle. From here again you draw drop candle, you get a drop candle at the body. See, this is the close at the body. Recently I gave you an exercise in our Telegram group. NIFTY 50. Is it a valid supply zone? That is the question asked. Remember? Exactly the same technique you have to apply. So from here, if you add, this is again going to be a drop candle. So a drop, base, drop. This is going to be a drop, base, drop. So you have a very small zone here. Drop, base, drop. This is the small zone you will get. This is the drop, base, drop. That way you can draw a zone, a teeny zone, a small zone. So risk is also very minimal now. Because risk is very minimal, definitely you can plan a trade. If this is violated, you can exit. That way you can plan. Or still, if you want to add some more, you can extend your stop buffer. You will be having a stop buffer. You can extend, because I clearly told you when I explained about stop buffers. Whatever the 3% stop buffer or 5% stop buffer, they are the minimum values. If you want, you can further extend. Why you can further extend? Because this zone is a very teeny zone. Sometimes there are higher chances it will be pierced, and again prices go down. Because it is pierced, if you exit, after that if prices go down and gave a very good result, you will be missing the trade. Unnecessarily, you exited the trade. So that point of view you can extend. Maybe you can draw a zone like this. Like this. Maybe assume this is your stop buffer, a 3% stop buffer. Still you want to extend. You can also draw like this. It's up to you. But anyway, today it didn't happen. I'm just telling you the techniques how you can follow when you are drawing the 1 minute zones. You add 3% stop buffer here and you extend a little above. You have the flexibility. And how much you can extend within your maximum risk acceptance level, you can extend your stop buffer. But the point you should understand, 2% should not be crossed. That is, these points we discussed in lesson 19. In case if you did not attend or if you did not listen all these points carefully, please attend that lesson 19 once again. The stop buffers are the minimum values. If you want, you can extend those values depending on our risk management. But today what happened? Prices just entered. Definitely you would have entered some entry buffer here. Within the entry buffer area, the prices are there. Somewhere here, entry buffer will come. And with this way, what will happen? Now you get a very good RR. Maybe you will get 1:20 or 1:15 RR you will get from here to this target. But if you would have considered this entire risk, 5 minute zone as a risk, you would not have reached this target. I'm sorry, target will be reached. You would not be getting sufficient RR. If you consider this entire risk, your RR will be less than 2.5. But here for all you people, at least minimum 1:3 RR should be there. But still we achieved that RR because you fine tuned to 1 minute level and you identified the real order flow. But there are chances that this zone also will be pierced. That's why I suggested add some more additional stop buffer, extended stop buffer. But today it didn't happen. But in reality, always you have to use extended stop buffers when you are dealing with 1 minute zones, especially the tiny zones. But anyway, finally it reached the 15 minutes target. This is last, remember, this is the last 1.5 hour trade. At 2 o'clock prices entered into this zone. Let me show you in 1 minute time frame. This is exactly at 2 o'clock, afternoon 2 o'clock candle. And 15:16, that means in 1 hour 15 minutes our trade is completed. If it is F&O trade, it could be a successful trade. But in intraday, the problem is after 2:45, if you take the margins from your stockbrokers, intraday I think at 2:45, before 2:45 or 2:30, you have to exit from your trades. But F&O traders would have exited in this candle. And how much opportunity Atul has given to us today? Atul has given you a 3,675 rupees opportunity it has given. How much you captured from this, that is a different story. But this is the opportunity Atul has given, and this is the opportunity Dalmia Bharat has given to us. And that way Atul has given 4.7% ROI. Based on one futures margin cost. Atul is also very cheap in among the other future margins. Atul it is around 79,000 something, close to 80,000. The margin cost of one future. Even Dalmia Bharat also around 90,000 or 95 something. I didn't remember exactly. But both are less than 1 lakh only. So among the other F&Os, these are all the cheap price, especially the margin cost. And there are two more, Bajaj Finance and Navin Florin. Navin Florin I already explained you in yesterday, so I don't want to get into this again, because this is a daily zone. But today prices entered within the first 75 minutes area. A 15-minute zone is created, but see, this is exactly at the proximal line of 75 minute zone. That is the point you have to understand. Once you get into 5-minute zone, see here you have a drop and a lot of action, price action outside the 75 minutes area. Finally within this area, final came. But this is also part of the base. This candle is also part, because all these base candles. And this is the actual leg out, gone out of the base. Somehow the price action I am not comfortable. So let us see. Let us depend on this fine-tuned area even next time, if our software identifies this stock. Because I am not fully comfortable with this price action at 5 minutes level within this area. It's quite risky. What I am feeling, quite risky. If you get a trade, okay. Even if you leave even if I don't take the trade, also okay. For me, this is according to me, I am telling you. Based on my experience, sometimes if I get some discomfort about the price actions, I leave that zone. Missing trade is also okay, not a problem. But having doubt in our mind and stop doubt means no excuse for that. But if you want to plan a trade, maybe you can plan. You can take your risk according to your risk. Maybe some people can wait only if it enters into the zone. That means in this candle, if it enters inside, at the time only you can plan a trade. So that risk also minimal. If before from here itself it reaches and turns out, you will be missing the trade. But anyway, the one Bajaj Finance is a daily zone. How I fine tuned this zone? This is a daily zone. So this is the leg-in candle. Sorry, this is the leg-in. Because if you add the hidden body, you are getting a very good body here. So it's a rally, base, rally. This is how software identifies. These are all hidden zones. Many people think this is a base candle, this is a base candle. Okay, already we have an order flow. I fine-tuned at 5 minutes. How I fine-tuned? Let me show you. We have a rally, base, rally, fine-tuned with 75-minute zone. We have a good 75-minute zone here. We have a rally, 1, 2, 3, 4 base candles, and again a very good rally candle. Now again within this we have 15 minutes zone. We have fine-tuned. So this is the 15 minutes time frame. So here we have a drop, a tinny candle. This is a tinny base candle. Some of you may say this is entire candle is filled. Because entire candle is filled, it is a leg candle. So we cannot draw the zone because this is a drop candle and this is a rally candle, medium size. This is a rally candle, big size. No base candle. That way you may say. But remember, this is a tinny candle. That means smaller than the medium size candle. That way I have treated this. I considered. I am satisfied with this. Drop, base, rally. In case if you did not convince, leave it. No issues. I am convinced I have drawn drop, base, rally. And 5 minutes time frame. We have identified the order flow here. See here we have a rally candle, 2 base candle, and again a leg out candle. So this is the fine-tuned 5 minutes area within the 15-minute zone. Rally, base, rally. But today price did not enter into this zone. We did not get a trade. So these are the 4 high liquidity zones we identified from our yesterday's list. Hope this could be. I hope you might be seeing some learning from this video. Especially many of you might have missed this Dalmia Bharat trade because of not finding 1 minute high liquidity zone as an aggressive trade. Please remember that is an aggressive trade. And Atul also, if somebody did not take because RR is not good enough, there also you might be having a learning. Sometimes if RR is very big, you can fine tune at 1 minute level itself and you can find the 1 minute's order flow. That way also you can plan the trade. So that risk will be minimized. That could be another learning for you. So this is about, and apart from that, Nifty 50 also we have seen how the traps worked perfectly today. The 5 minutes high liquidity trap. But if you observe at the very micro level observations, even we have seen 5 minutes also institutions set one more trap, that is at the 1 minute level, which actually picked the orders from that 1 minute level zone. That is a rare situation you see generally. See, many times we limit ourselves to maximum 5 minutes, we don't go beyond 5 minutes. Because 1 minute and all we cannot trust. But we have seen how institutions set the different kinds of traps to protect that weekly demand zone. Last video also I talked about that weekly demand zone. How institutions are planning inside that weekly zone to protect that zone. So these are the learnings from this particular high liquidity zone analysis video. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.